Hi there. Bitcoin so far this week has dropped almost or at one point over 6%. As of this moment, it's still below 80,000. Over the past few months, I've warned continuously that Bitcoin is showing warning signs that is repeating what it did a few years back. So let's go and take a look at it again. What exactly happened and where it's potentially heading? If you're new to my session, I'll go through the Wyckoff stage, potential trend change, as well as key price levels, all through the Wyckoff lens. And these are not financial advice, they're for education purpose only. The weekly chart of Bitcoin currently has gone below this, what I call the bear flag. If you recognize this pattern, it's basically below this uptrend support. So if you look at it, it looks like it's going up, higher lows. But what's going on is that if you combine it with the Wyckoff method, it's basically at the stage after what we call the late formal, the upthrust. It's a point where it's got a higher price than the initial formal. What's important over here is that at this point, you can see below this 81,000 support, there's no strong support over here. You can refer to this stage during February, March 2025, last year, at about 78,000. So that's where the price bounced. So it challenged that level and then bounced up a little to around 79,000, but it's not over yet. Like I said, it's not a strong support level over here. The strongest support is actually at this point, the 74,000, because that's the lowest point when what we call the sign of weakness back then in April 2025 tested. And it's also very close to the long-term playground ceiling. So this white line over here, if I shrink the chart, you can see is actually this mega box over here that tracks Bitcoin price since 2017. About 70-80% of time, Bitcoin has been trading within this range. Of course, along with time, this has to be adjusted because of all the inflation factor, the changing in the world order, as well as currency strength, whether it's USD or other currencies. Okay. So back to the point I mentioned in the beginning. What is happening that's very similar in terms of pattern back in 2021? So if you're not new to crypto, you will remember that mega cycle, but it's pretty small compared to what we have today. However, it's only an illusion on the chart. Because if you look at the price here, the upthrust back in 2021, it was almost at 70,000. All right, this upthrust that we had back in 2025 was only less than double, only 80% about that. So it's not that crazy of a climb if you look or calculate from peak to peak. Of course, if you calculate from the bottom, that's another story. So at this point, what we're looking at is the initial from the first formal buying climax. It has gone through a bull flag, what we call, meaning it looks like it's going through a downtrend, but it's actually accumulating. And when it hits this red key level at around 32K, it bounces up to the late formal stage. However, if you compare the volume, it's clearly lower than the first round of formal. So that's another warning sign over there. And eventually, we get to the point that I explained that looks very similar to what we are going through right now. It looks like it's got higher lows and higher highs, but then it's building the path for the final drop. Fast forward to 2024. It's got this reaccumulation stage, and it's got that mini, let's copy this over there. Same thing. It looks like it's going down, setting the sign of weakness. That's the SOW's full name, sign of weakness. But then it goes up again. However, look at the volume. Same thing. Much lower volume than the initial FOMO. Lower volume than the initial FOMO. And finally, this seemingly slight uptrend over there. Same as what happened here back in 2022. And finally, it dropped, falls through the support of that upward channel, and going back to test. Initially, where the sign of weakness was. So back in 2021, the sign of weakness was at the red key level. It dropped to that level and stayed there for a couple of weeks, hovering around. The bulls were trying to push it back to above that level, but got heavily, let me zoom in so you can see clearly. So it dropped to that level. The bulls, or people bought the dip, you see the long wick over there, stayed there for another 3 weeks, trying to push it back to that level, failed and got rejected until the point the panic is over. Then it started the actual accumulation cycle. We are still early in this drop, right? We probably will see a bit of sideways trading around this mid 70,000 range, or somewhere between 74 to 81K. Nobody knows exactly where that is, but those two lines are absolutely around that level. If the ceiling of the long-term playground takes stronger effect, the price would travel along sideways above the 74K. This is a key zone. There's 55,000 to 70,000, because that's where the reaccumulation happens. Right after the accumulation cycle, when the whales has already set the platform to pump to the buying climax. This range should provide stronger support from 55 to 70 in case the price really tries to seek to an accumulation cycle before it goes to the next, you can say, bull run. I call that a distribution cycle again, based on the Wyckoff method. So it's probably not going to go back to as low as what it went back in 2023, the 15K level. Remember, it's a probable, not a certainty. Nobody knows, no one knows what news are going to be shoot out to the market, driving panic or FOMO. Remember this. We are as good as how resistive to the news being pumped into the market, into different media, whether it's YouTube or traditional media or any other kind of platforms, maybe Telegram or anything. So if people start to pump out a lot of proofs saying that quantum computing can destroy Bitcoin, Bitcoin halving is near, when it ends, what are the miners going to do? Are there still sufficient people to run the network to support the transactions? All sorts of reasons can be pumped together at the same time to drive panic. So when that happens, Bitcoin can drop really low. Going back to the reality right now, I was just mentioning about the pessimistic scenario. Not that that's going to happen, but it's a possibility. So back to here. Stronger support, I already mentioned, the key level 74K. In terms of Wyckoff distribution, if it really ends similar to what happened over here, you see after it dropped from the key level to the panic over stage, it was another 40% drop. So let me once again enlarge this. Sorry about that. Because if you're watching on a mobile, it's not going to help you. So I'm going to redo this. From this level to the lowest point of the selling climax or the panic over stage, about 43%. All right, you see that? Not the upside, sorry. From here down, 44%. Okay, if it really happens in a similar sense, 74K to 40, let's say 40%, not as crazy as last time. 40%, it's interestingly right at the orange key level of 44K. All right. So these lines I haven't touched for months, if not almost half a year, or even a year. So look at this. That's what would happen if it really copies what happened back in 2022. And it's not impossible given what happened back in August 2024. Look at the line over here, this wick. It was at 49K at one point. So that's the picture. Of course, some people would argue, hey, it's only temporary. What's the bullish scenario? I want to say, keep an eye on these volumes. If the red volume keeps coming in, like what it did over here, look at these red volume. All right, if that continues, it's not going to bounce up, right? If the red volume comes down, there's the chance of it going back to test the previous key levels would be higher, but not if the red volume stays at current level that's higher than the previous month's average. Okay, if it backs up really, there are multiple, just to mention two key levels, not about these red intermediate levels, the 91K as well as the 104K. 104K is the level that it can't even reach with this mini rally. Because if you're looking for a head and shoulder pattern, right, you would have assumed that would reach 104K before it got rejected. But now we're seeing it's not the case. It's a skewed head and shoulder. Or in Wyckoff terms, it doesn't matter whether that's a shoulder. It's basically a last point of supply. Another last point of supply over there that we talked about for 2 weeks already. All right. The last point of supply is basically where the whales or whoever that's quick enough offload what they have on hand to those that act slowly or waiting for a rebound or waiting for the price to go up higher. So that's why I always mention, keep a stop loss, no matter how bullish you think whatever you're holding is. You never know what would happen. We are not the people that get the news the quickest. I don't know about you, but certainly not me. I am absolutely not the one who get insider information or the first-hand news, even hearsay. I'm like, I guess, most of the people. When things come up on the news or on YouTube, that's when I get to the news. But a lot of people has already acted already. So, back to the chart. We've talked about the big picture, right? Bullish, bearish, catastrophic scenario, 44K. Now let's get to the daily chart. So these dates are no longer relevant because the downtrend has clearly developed. It has broke below this uptrend line on the 20th. So let's draw a channel for this current downtrend that's going on. Here, just to make sure the wicks are included. So this is still evolving, and we have to adjust along the way. All right. Don't think after you have like 3 to 4 reference points, you can stick with it forever. It's not like that. When the price moves, to slightly outside of the channel and you have very few reference points, you have to adjust along the way until the point you've got absolutely nowhere to adjust because it's already very tight with, I don't know, 5, 6, 7 reference points that it doesn't make sense. If you move, you're going to exclude some of them, then that's not where you want to move. But initially, when you have only got a few references, we have to adjust. So here, we are seeing all these levels, and it's coming to this, the temporary bottom of the channel. So you can see it's bouncing from this 78K600, this yellow dashed line over here, as well as the bottom of the channel. All right, we draw this channel just now, so it's the bottom. It's not absolutely going to be a bottom if it drops further, because I can still adjust this channel to an even steeper slope. So it's not going to touch that. But as of now, as of what happened just a while ago when the price dropped to that level, that's where it was. So this is a normal maneuver, meaning when it bounced between the two edges, the bottom and the ceiling. So what to expect, at least for micro perspective. I'm going to bring the dates down here. We've got multiple dates. If you are very bullish that Bitcoin will get a massive rebound, here, that's the very first occasion that it can break outside of the channel and confirm the downtrend is over. This very first triangle points to the 6th of February. All right. The second, over here, this white dashed line at around 83K600. And then this was supposed to be the uptrend or the bear flag bottom, this blue line, right at that cross with 3 lines. That's February the 8th. Okay, that's the second opportunity for breakout confirmation. Still bullish, not as bullish or as quickly reacting as the same. The third opportunity comes around the 12th. And if the bulls successfully keep the price at the current level, meaning the 78, 79K, and trade sideways, this points to the 15th of February. Of course, like I said, it may come as low as 74K before it stabilizes and do some sideways trading. That we've got 2 other dates, or actually 3, if we count these ceiling of the long-term playground, but let's ignore that for now. We've got the 19th as well as the 22nd. So somewhere between these 2 dates, we've got the ceiling of the long-term playground. So you know where the date is, so I don't have to draw too many. So February is very key. As you can see, from the very first week, next weekend, all the way to the 3rd week, there are 6 occasions that Bitcoin can tell us whether it is really going to continue with the downtrend before it comes to challenge this green key level of 62K. Okay? So back to the big picture and show you where the key levels are once again. Between 74K to 62K500, there's 67K as an intermediate support. So that's around this trading range top. Okay, 68, 67, that range. And then we have this 62.5K around the median of the reaccumulation level. And finally, the bottom of that trading range at around 55K. All right. So don't be surprised if Bitcoin, continue to drop further. And if you are interested to get access to these sessions 2 days earlier than the others, join the channel membership now. Thank you, and see you in other sessions.